U.S. LNG exports have increased 30-fold since 2016. America is now the largest natural gas exporter on Earth, and a third of U.S. gas capacity already powers AI data centers. This isn't a sexy trade. Nobody posts about it on social media, but it returns 262% over 10 years, and it's about to accelerate. Two massive demand drivers just collided at the same time. First, AI data centers. By 2030, data centers will consume over 10% of all U.S. electricity, up from 4% today. Solar and wind can't scale fast enough. Natural gas is the only reliable, dispatchable power source that can be deployed at the speed tech companies need. The Ham Institute estimated AI alone could require 10 billion cubic feet per day of additional gas by 2030. Second, LNG exports. Europe permanently severed its dependence on Russian gas after the invasion of Ukraine. That demand isn't coming back. U.S. LNG export capacity is projected to nearly double by 2030, from 12 billion cubic feet per day to over 21. Moody's says 7 billion cubic feet of new capacity begins production in 2025 and 2026 alone. Combined, LNG exports and data centers could drive U.S. gas demand up 20 billion cubic feet per day by 2030. That's a 19% increase in total production. And $35 billion in new pipeline infrastructure is being built through 2027 to move it all. Cheniere Energy is the dominant player. They operate Sabine Pass and Corpus Christi, the two largest LNG export terminals in the United States. They liquefy natural gas, load it onto tankers, and ship it to Europe and Asia under long-term contracts. Full year 2025 revenue hit $20 billion, up 27%. Net income surged 64% to $5.3 billion. EBITDA was $6.9 billion. This is a cash machine. The stock trades around $257. Average analyst target is 303. High target is 340. 10-year return is 262%, crushing the S&P 500. And the expansion isn't done. Corpus Christi Stage 3 is under construction. Additional capacity is in permitting. Every new terminal locks in decades of contracted revenue. Cheniere isn't the only way in. EQT Corporation is the largest U.S. natural gas producer, supplying the raw material Cheniere exports. They benefit directly from rising domestic prices. The EIA forecasts Henry Hub gas prices nearly doubling to $4.30 per million BTU by 2026. Kinder Morgan and Williams companies own the pipeline infrastructure that connects gas fields to export terminals and data centers. Every new terminal and every new data center needs pipeline capacity. These are the toll roads of the energy transition. And for broad exposure, the First Trust Natural Gas ETF gives you the entire value chain in one ticker. Now the risk. A global LNG glut could emerge if Qatar, Australia, and Mozambique ramp capacity faster than demand. Gas prices have historically stayed low, even as exports surged. More supply doesn't always mean higher prices. Renewable energy could cannibalize gas demand at data centers long term. And environmental regulation, however unlikely under the current administration, remains a tail risk. So what's the chaos capital take? Natural gas is the most boring and most reliable energy trade on the board. LNG exports are locked under long-term contracts. Data center demand is structural and accelerating, and the infrastructure is being built right now with $35 billion in committed capital. Everyone chases uranium and nuclear. Meanwhile, natural gas is already powering a third of AI. That's not a future thesis. That's reality. The world's most important commodity isn't gold. It isn't oil. It's the invisible gas that powers your data, heats your home, and fuels the AI revolution. And America has more of it than anyone. The capital markets are chaos. Embrace it, and I'll see you in the next video.